So this is going to be the beginning of 14-2, which is called writing off and collecting uncollectible accounts receivable. So we're going to do two basic things. We're going to learn how to write off an uncollectible account, which basically means we're not going to collect that money. So we just kind of pretend it didn't exist and we just write it off. And the second one is to account for the collection of an account receivable that was written off. So if we decided that it was not going to be collectible and we wrote it off, then all of a sudden they decided to pay us, and we have to account for that as well by collecting that money. So this is the PowerPoint part of the 14-2, and it gives us a couple more definitions. The basic one, again, learning about writing off an account, which means to cancel the balance of a customer account because the customer does not pay it. In the PowerPoint, as well as in my notes, it gives an example of each transaction. It gives you in here the T account form, and then it gives you the sample transaction for each of the different types. So the first one says January 25th, wrote off Edmonds Hospital past due account as uncollectible for $639.88, memorandum number 58. So basically it means we wrote it off because this account never paid its bill. So what we have to do to journalize this, it goes into the general journal, that we debit it for the date of the 25th, allowance for uncollectible accounts, the memorandum 58, and the amount that was given, the $639.88. Then we credit the accounts receivable in the name of the company that never paid us. And remember that dash here means we are really using two accounts, the basic accounts receivable account, the general ledger account, and the name of the person who owed us that debt, which was Edmonds Hospital. So in the general journal, we have one debit and one credit. Again, they must equal. When we go to post this, remember that we post each line of the general journal. So we first post it to the allowance for uncollectible accounts for the $639.88. And it shows here all the different steps in the PowerPoint presentation. The one that I want you to really look at is the one that has the two in here, the accounts receivable and the Edmonds. Remember, there's a dash in the post reference because we posted to both. So this is the credit portion of it, is the accounts receivable, shown here as the credit. And then when we post to Edmonds Hospital down here, it shows in the item we have to write the words written off. So that's something new that you have not done before. So we have to write written off and the amount of the credit. And when we had a normal debit balance, when it's written off, it means now they owe us nothing. We collected nothing, and they owe us no more because we wrote it off. I'll also show you this in the notes. Same thing. I wrote out the transaction and I showed you here in the notes what that would all look like. And I even made a note here to make sure you wrote the words written off. The second part of this that we're going to learn is how to then reopen an account that was previously written off. So here it is in the notes. We received cash in full payment of Edmonds Hospital. Previously, we wrote it off as uncollectible. So the previous transaction, we wrote it off. Now they're going to pay us. So the transaction's still in the general journal. We now debit the accounts receivable Edmonds Hospital for that amount, and we credit the allowance for uncollectible accounts. So it's kind of like we're reversing that previous transaction that we just did. So here it is in the Google, or the PowerPoint slides that are also in the Google Classroom. Same transactions, shows you in the T account form, and it shows you here in the transaction in the general journal. Once we record that in the general journal, we also have to record that transaction into our cash receipts because we received the cash now that Edmonds Hospital decided to pay us. So it will say the memorandum number 71, and it will also say the cash receipt number in that same transaction. So same transaction here now, though. To record it in the cash receipts journal, we write the date, the name of the company that paid us, which was Edmonds Hospital. This time in the document number, it's the receipt that we have, so receipt number 695. And it's in the accounts receivable credit column and the cash debit column because we now have to record that cash that we received from them. Once we post this, there's a lot of things we have to post. So we post the general journal, all of the lines there. And then we also post from the cash receipts journal. So previously we had written off that account. You can kind of see that shaded in gray. Well, now we have to write in the reopened the account. So from the general journal, when we record it up here in the Edmonds Hospital, this 639.88, we have to debit that in the Edmonds Hospital ledger to show that it's been reopened. And then once we post it from the cash receipts journal, it shows that they have paid it. So now their new balance, once again, is down to zero. So just, again, be very careful about that